Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and we're going to run through a few of this week's biggest stories in the mining industry. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and of course, leave us a comment below. Let's get into it.
It's been a historic week for precious metals, with gold breaking solidly through $3,500 per ounce to hit new highs, and silver passing $40 per ounce for the first time since 2011. The gold price spent the summer in a consolidation phase, and part of what's spurring its latest move is increasing expectations that the US Federal Reserve will lower interest rates when it meets next from September 16th to 17th. Although President Donald Trump has been pressuring the central bank to cut, it's held rates steady since December 2024. It's Fed Chair Jerome Powell's recent speech in Jackson Hole, Wyoming that has investors anticipating a cut later this month. Well, as usual, he made no promises. Powell said that the shifting balance of risks could warrant an adjustment in the Fed's policy stance. CME Group's FedWatch tool shows that market participants are nearly unanimous in thinking that the Fed will reduce rates by 25 basis points at its upcoming meeting. Bond market turmoil also helped move the gold price this week. Yields for 30-year US bonds rose to nearly 5% midway through the period, their highest level since mid-July, on the back of a variety of concerns, including tariffs, inflation, and Fed independence. Globally, the situation was even more tumultuous, with 30-year UK bond yields reaching their highest point since 1998. Meanwhile, 30-year bond yields for German, French, and Dutch bonds rose to levels not seen since 2011. In Japan, 30-year bond yields hit a record high. Tariff developments have also created uncertainty this past week. After an appeals court upheld a ruling that many of Trump's tariffs are illegal, the president's administration asked the Supreme Court to fast-track its review of the decision. Going back to gold and silver, their recent price activity is certainly raising questions about what's next. The broad consensus among the people I've been speaking with is positive. More on that later. But it's also interesting to see the metals get more mainstream attention. Notably, investment bank Goldman Sachs now has a gold price prediction of $4,000 by mid-2026, although it notes that the yellow metal could rise to nearly $5,000 if just 1% of private investors shift from treasuries to gold. We're definitely entering uncharted territory right now, and I want to make sure I bring you commentary from the experts you want to hear from. Drop a comment below to let me know who you'd like me to talk to, and also what questions you have. It's been a short week, at least here in Canada, so for this bullet briefing, I want to highlight a couple of my favorite recent interview clips instead of the usual news stories. First is Ken Hoffman of Red Cloud Securities. It was my first time speaking with Ken, and he made a compelling case for how gold could get to $10,000. You'll have to watch the full interview for that, but I'll leave you with this segment where he outlines why he thinks gold has a clear path forward from here.
And you have Trump going after the Fed. He wants much lower interest rates, yet at the same time, we're running huge budget deficits, which need to be paid for somehow. And all these things are coming together where, again, every one of these things is a tailwind for gold. There's really nothing sitting in gold's path going forward. And I think, large times, really good times for gold have been there, but I think they continue, and particularly into 2026. I think things could change if there's an election in 2026 and all of a sudden Trump isn't allowed to do as much as he is sort of with these tariffs, and, even tariffs on like India and Brazil are sort of, nobody really knows where he's going with this. All these things are doing damage to the dollar, which again, it seems like he wants. And again, how do I hide in a refuge if I'm an investor? It's gold.
Next is John Hathaway from Sprott. He shared what he thinks will be the trigger for gold's next move higher. Spoiler alert, it's a major decline in equities. But he also discussed his bullish outlook on silver, which moved past 40 not long after our interview. Here's what he said.
Well, not to get too dramatic, but I think it's a smoldering volcano. How's that for exaggeration? But it's sort of hanging out below 40. We talked about it this morning on our daily call. And silver production, mining, is less than consumption. And so the market is in deficit. So you've got structural things that favor higher prices. if all of these other things that I think will take gold higher fall into place, silver will get a bid, and it tends to be more volatile than gold itself. It's a smaller market, doesn't take as much money to move it. So I think, I kind of played around with potential price targets on gold, and they didn't give a date, so you can't hold me to that. But I would say, order of magnitude, I think silver could do more in terms of percentage gains.
I'll leave the links to both of those interviews in the video description. Definitely check them out for more on gold and silver, plus other resource sector commentary.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.